Hi everyone, with the 2024 US election around the corner, it's a great time to explore how election outcomes impact our economy and by extension create unique investment opportunities. So in this video, we are diving into the way each party's policies influence different sectors and how understanding these shifts can help investors make smarter, more informed decisions. Why elections matter to markets? Now, elections aren't just political events. They set policies that directly impact the markets. So, when a new administration comes in, changes in regulatory policies, federal spending, and market sentiment all reflect the new leadership's goals and priorities. So, take for example, Republicans often favor deregulation. So, this approach benefits traditional sectors like oil, gas, and financial services because it allows companies to operate with fewer restrictions, potentially boosting their profitability. But on the other hand, Democrats typically support tighter regulations but often balance this with incentives for those sectors like healthcare and renewable energy. Take the Trump administration for instance. So the deregulation in the energy sector led to a boost in oil production, which benefited companies like Exxon and Chevron. Meanwhile, the Biden administration has focused on clean energy, offering tax incentives to renewable energy companies and therefore spurring the growth in green technology. Federal spendings also prioritize the priorities of federal spendings also vary. So Republicans tend to increase defense spending. They direct resources to companies to the defense sector. Democrats, by contrast, often focus on healthcare and infrastructure. So under the Biden administration, we saw the Inflation Reduction Act. This funnels funds into healthcare and infrastructure projects, which in turn benefited companies in those fields. So if a Republican administration takes over, however, we might see a renewed emphasis on military spending, boosting companies involved in defense and national security. And then there is market sentiment, or how investors feel about these policy changes. So leading up to following an election, investors often adjust their strategies based on what they expect the new administration policies will be. So for instance, a Republican win might drive up stock values in the financial and traditional energy sectors, while a Democratic win can boost the renewable energy and healthcare sectors. So these reactions create both challenges and opportunities for investors. So what's the takeaway here? Elections shape our economic landscape in ways that impact which sectors will thrive when the election results comes out. So by paying attention to these shifts, investors can position themselves to benefit from the potential market changes. So let's now look at the party-specific impacts on key sectors. Now, if Republicans win, the energy sector is a big one, and the deregulations of this sector benefits traditional energy because it reduces operational costs. It allows companies like Exxon or Chevron to expand production. Financial services may also benefit as deregulation makes it easier for banks to lend, invest, and ultimately grow. Banks like JP Morgan Chase tend to see a boost when regulations ease. And then there's this defense sector. So Republicans typically increase defense spending, which is great news for those defense contractors like Lockheed Martin and Raytheon. So increased demands for defense technology means more contracts, translating into revenue growth for these private companies. Let's look at what happens if Democrats win. So for healthcare, Democratic administrations usually expand federal programs, which drives up the demand for health services and insurance. So this benefits companies like United Health Group. So renewable energy and infrastructure may also stand to gain. Democrats favor policies that support green energy and infrastructure projects, helping companies involved in solar, wind, and electric vehicle technology. So this support comes in form of incentives, subsidies, and federal spending, and giving these industries a boost. So the key here is that each party's policies create unique opportunities for specific sectors, and that sets the long-term trends that investors can capitalize on. Now let's discuss how investors can leverage exchange-traded funds, ETFs, to tap into these sectors depending on the election outcome. So the first sector we are talking of is energy. So if Republicans win, the SPDR Energy Select Sector ETF, ticker symbol XLE, could benefit as it provides exposure to traditional oil gas companies expected to thrive under deregulation. But if the Democratic Party wins, investors might consider the Global X-US Infrastructure Development ETF PAVE, which focuses on renewable energy and infrastructure companies poised for growth under the green initiatives. The next sector we are talking of is in healthcare. A Democrat Party win could make the Healthcare Select Sector SPDR Fund ETF, ticker symbol XLV, appealing. And this ETF offers broad exposure to healthcare providers expected to benefit from expanded federal health programs. The next sector is the financial services. For Republican win, the iShares US Financial Services ETF, ticker symbol IYG, is worth watching. This ETF includes major financial institutions positioned for growth from tax cuts and a relaxed regulatory environment. ETFs offer a diversified approach, allowing investors to benefit from trends aligned with election outcomes. And all this without putting all their eggs in one basket. So let's discuss the long-term impact of this federal spending. Now, while elections bring immediate shifts, major federal spending, particularly in technology and infrastructure, can have lasting effects. In the Biden administration, CHIPS Act and the Inflation Reduction Act are examples. Both are aimed at sectors that could benefit over the long term, regardless of which party comes to power. The CHIPS Act, for example, was designed to reduce the reliance on foreign semiconductor production, supporting companies like Intel. And this shift strengthens the technology chain and boosts job creation domestically within the US. And that is a benefit that can last well beyond whatever the current administration is. Similarly, the Inflation Reduction Act invests in clean energy and electric vehicles. This provides tax incentives for the green technology space. And these policies help stabilize the renewable energy sector, ensuring growth potential for many years to come. So the long-term federal spending provides stability and growth, and this spans across sectors like tech, healthcare, and infrastructure. So for investors, focusing on these sectors can align their portfolios with trends that can go beyond in any single election cycle. So what's the conclusion here? So with all the things that we discussed, to sum up, elections shape policies that impact our economy and influence specific sectors. And these changes offer unique opportunities for investors who pay attention to federal spending shifts, regulatory policies, and market behavior. So as we watch the upcoming election unfold, remember that understanding these dynamics that we discussed in this video can be a powerful tool in building a well-positioned investment strategy for your portfolio. Thanks for tuning in. If you enjoyed this content, please like, share, and subscribe. Stay tuned for more insights on navigating economic events with confidence. I hope you like this video. Until the next video, see you and take care.